to the market update. My name is K Kim with the Traders Club. Today's March 30th, 2018, Friday. I hope you guys had a good week this week trading. Today, market is closed due to a Good Friday, Easter this Sunday. So a calm, peaceful day. No flashing lights on your left. But we'll look at a couple more names today. We'll look at Spider, IWM QQQ, Apple, Tesla, and GLD, and we'll call it a day. I have darkened the 200 SMA for your viewing pleasure. So as you can see here, kind of going out in a primary term, 200 SMA does have a pretty impressive resume here. If you look at this, since last 9 years, only 3 times the market has gone below, well below 200 SMA, right? Every time when it did that, 200 SMA either flattened out and started pulling back a little bit. Do you see that? So when you start to see 200 SMA starts to flatten out a little bit, I think then you're going to expect some volatility. You're going to expect, primary terms start to be, what he's saying is the primary term trend is start to slow down. Obviously, it is an inevitable thing that the market does not go straight up. It's going to go up. It's going to come down, right? That's what we call an uptrend. If it doesn't go up and down, there's no uptrend, right? If it does go straight up, a lot of times it's going to come straight down. I'd rather see an uptrend than something going straight up. I'm being honest about this because if anything goes straight up, it tends to come straight down. You guys all know this. I'd rather see kind of a well-cultivated uptrend, which we have on the S&P, right? We have that. We have very well-cultivated uptrend, and we want to respect it. That means you want to give benefit of the doubt to the buyers in the primary term. And when I say primary term, I mean the chart you see now. This is a primary term, right? Most people don't understand this. That's the primary term. When I say intermediate term, I mean several months. When I say minor term, I mean several weeks. So zooming back in here, looking at more of an intermediate term here, you can see that 200 SMA does have a actually pretty impressive resume maybe last year or so. That was the Brexit panic back in June 2016. You can see that 200 SMA did act as strong support. And then prior to the election, we saw that in November, strong support as well. And then February this year, when market came down, we saw 11% correction from the up top. And it came down precisely to 200 SMA, which is coinciding to my last level of my fib. We bounced, got up to the gap area, which we talked about a couple weeks ago, that the gap area could act as resistance. A lot of times those gaps, and the gap needed to be filled for the buyers to continue higher. Well, gap was never filled. And so a lot of panic selling happened. I think, bears really took advantage of that. The bulls were vulnerable. Bulls needed to kind of show a little bit more strength to fill those gaps, kind of stop that selling pressure. There was a selling jump start. These two gaps were that authority, right? So bulls really needed to go up there, fill that gap, stop that pressure, but couldn't do it. And bears took advantage of that situation and brought it down pretty hard. Came back down to where? Came back down to 200 SMA, the simple moving average. That's what SMA is. And at the same time, that's a level coinciding with where? 50% retracement, which is my second level of my fib. And then first level of my fib is prior support now acting as resistance. You can see all these levels are almost orderly fashion respecting these levels, right? So that's a good sign because S&P 500 is really respecting these levels and also kind of acknowledging that these are important levels. So right now the battleground is really the first level of my fib, first level of my fib coinciding with prior support, now acting as a new resistance. And then the support right there, which is 200 SMA, did act as support here last 2 times, which is coinciding with the 50% retracement, which is also 259. And then the last level of my fib was 252. So we got these 3 levels to watch going into next week here. So if we do see a bounce, so if you're a buyer here, what you want to see is you want to see this gap first needs to be filled. Remember what we talked about? These 2 gaps were not, the bulls failed to fill those gaps, and that's when kind of a panic selling happened here. So, and then this gap is also open. So we got the breakaway gap, continuation gap. We got another small tiny gap right here also. This gap is actually still open, the tiny gap here. So we got the breakaway, continuation, another continuation, and another continuation gap there. Is any of these exhaustion gap? Is this exhaustion gap? We don't know. Only way we'll know that if that's exhaustion gap, if it actually gets up and fill it. If that's the case, that potentially could be exhaustion gap. And if that's the case, then we could possibly see something like this, something like that. Or, 200 SMA continue active support where this thing gets up, fill some of these gaps, come back down, fill this gap, and then get up. So I'm just giving you different possible scenarios here. So I think what the buyers really need to do is we need to go and fill these gaps to stop the downside selling pressure. I think that was the first thing. And to do that, buyers need to gap back above prior resistance here, prior support acting as new resistance, which is coinciding with the first level of my Fibonacci. So, but the bears, what the sellers want to see is another lower high. We got the high, lower high, and then potentially another lower high before coming back down. They could also argue that this is potentially a bear flag. So it gets up a little bit, it fails to fill this gap, and then make another leg lower. Is that a possibility? Yes, I am open-minded for that. However, I think what I was saying, if you read my recent article titled "Be Greedy When Others Are Fearful," if you just Google it, or if you haven't read that article, it's on my blog, tradersclub.com. I think a lot of people are really relying on this 200 SMA, right? And then there's a support levels coming a lot of different ways. Let's see, how can I, right there, here, from here. So we got support here, and then we got support from here. So you can see that you got support coming from here to there, and then from here prior to the election. This is 2012 or 2016 February low, and then November 2016 prior to the election, that coincides with these levels. So you got all these support, and that could be a good thing. So we got the 50% retracement, we got the last level of my fib, we got the 200 SMA, we got the rising uptrend support from here, and we have a rising uptrend support coming from all the way to February 2016. So you got all these supports, right, colliding in that vicinity. It established 2 things. One, that's a strong support. We don't know yet that it's going to become a legit support until this thing starts to see some evidence of that. 2, it's potentially a trap. So, because everybody's placing their stop below this level, right here. They're putting stops somewhere here in that vicinity. Right? A lot of people, nowadays, everybody has a charting software, right? There's a plenty of free charting software, so they draw these lines and look at some of their moving averages. The market is not stupid. It knows that. It knows what you're exactly thinking. So you're like, you know what? I'm going to go along here. I'm going to put my stop right there. Market knows that, and market hates it. Market hates it when you think you figured out market, and so market is ready. Market needs to take most people's money. So if we do bounce from here, because that's actually pretty strong support, we've got all these support coinciding in this vicinity, colliding in that vicinity, and that is a strong support, then I think we will need to see some more evidence, and which will follow up next couple weeks. But if we do see this thing breaking below, I think that's a possibility where it will take your stop before getting back up. That's my take. That's my proposal. That's what I think is going to happen, right? If we do lose it. I know what I've been hearing in social media. I'm not going to name names, but so-called gurus will say, if we lose 200 SMA, well, all hell's going to break loose. You know, that person actually said back in 2000, man, you know what? I should have saved that tweet and just exposed him right here, but I didn't. Right here. This person, which I'm not going to name names, said the same thing. So if you heard some shenanigan like that from some so-called guru or so-called expert, well, if we lose this support, this 200 SMA, this is IWM back in August, all hell's going to break loose. Did you hear that? I did. Well, what was I doing here? I was aggressively adding. I was buying every dips on IWM. And so if I listen to it, I'm like, oh my God, all hell's gonna break loose. Look at this thing just tanking. I've heard so many things, it's crazy. Because of IWM is finally breaking down after all year long of consolidation, right? That this was gonna, like people are saying this was gonna like bring the whole market down. But it was a completely opposite. Don't you love this market? This market it's just so crafty, so savvy, so sly. I mean, you know, it just knows what most people are thinking. It knows these phony people are thinking, right? And then it just reverses on you, just like that, right? All hell break loose, complete opposite. And that individual actually did also say, I'm all out of my IWM calls right here. I remember. Well, he really kicked himself and got depressed, right? And the same person now saying that the 200 SMA, if you get below 200 SMA, all hell's gonna break loose. I think if we break below 200 SMA, you buy that fear. You see, what I don't know is I don't know exactly where. I mean, it could be here, it could be here, somewhere in that vicinity. I don't know exact pinpoint. I mean, nobody can give you a pinpoint. But when you see this thing breaking below 200 SMA, when everybody's running for a cover, when everybody's running around in panic, in fear, freaking out, that's when you look for opportunity. That's when you buy. You wanna be a trader. You wanna survive in this market. You had to be ahead of these bozos online, these common people, right? You gotta think differently, guys. I'm telling you. That's the only way to survive this market. You start thinking like everybody else is thinking. You start watching what everybody else is watching. You start doing what everybody else is doing. Well, you just gonna be like everybody else, which is what? Being a loser. Not just in the market, but in life as well. You follow what everybody's doing, then you're gonna be like everybody else. What is everybody else? How is everybody else? Are they happy? No. Everybody else is fat, sick, miserable, unhappy, and they hate their job. So if you follow everybody and do whatever everybody's doing, you're just gonna follow that same thing in the market. There are so many people pretend to be something, especially in social media. That's the one thing I don't do social media. I don't have a personal. I have a Twitter account for my professional expertise, but I don't do anything. You never. If you follow me on Twitter or StockTwits, did I ever post anything like, oh, this is what I'm doing. Oh, yeah, this is on my vacation. Oh, look at my new ride. Oh, yeah. Like, These are the most depressed, miserable people. That's why they have to do that. They have to get a validation from a stranger. See, you understand that? A validation. And people like on Facebook and stuff like that, they always like, oh yeah, this is where I'm at. This is what I'm doing. Like, you know what I mean? Like always looking to be liked from other people. And a lot of times it's fake. A lot of times it's fake. It's not real. They just like to be looked at as they're happy. Like with all their fake smiles. Same thing happens on Twitter and stock Twitch and social media. All these traders, they're experts. They're all gurus. Like, I'm always right. Right? Oh, this weekend I'm gonna do this and do that because I'm so cool. Like, I make so much money on the stock market. This weekend I'm gonna go out of the country. I'm gonna go on vacation. Like, man, it's such an entertaining. It's like a Jerry Springer of like, I think that's what social media is becoming. It's like just everybody just all acting the same. Don't you think like all these different gurus, they're all trying to act like they are some kind of celebrity, like but celebrities are the most miserable people ever in this planet. Don't you understand that? Google it, search it. They all have a psychotic problem. They're all depressed. That's why they're always in some kind of like, you know, pills. Legal and illegal. They're most depressed. Celebrities are the most depressed people. They're just so good at acting on camera, right? They got everything, right? They got all the money, all the girls, all the cars, yet they're the most depressed beings. And that tells you most people don't even know how to truly find life, how to find happiness and success. I don't even know how I got into the topic, but let's continue here. Russell, see, market is closed, man. I can think. I can think about life. Russell 2000, similar story, 200 SMA, gotten slightly below it. And then, yeah, all hell's gonna break loose, right? And then continued higher here. We got back to 200 SMA. See, good thing about Russell 2000 though, Spider made a new lower low. But Russell is actually cultivating potentially higher lows. So we actually seeing relative strength here, right? Spider did not make new highs. Spider actually made it. So Spider's actually looking, well, because of the Qs made higher high, all-time high, but the Russell made equal high and Spider made a lower high, right? So you can see the trends, actions here on these indices, lower high, right? Russell did equal highs, but Russell is actually also right now still in higher low vicinity. They got the higher highs, so much more kind of a more bullish connotation as long as we hold some of these uptrend support there. So we are finding support here. 200 SMA still rising. You want to call this a double top? I wouldn't call it yet. I want to see at least this thing breaking below, well below 145, because you know what the market is capable of? Coming down, taking your stops, and then doing something like that. You know why that happens? Because we're on a primary term uptrend. But if if this market is in a downtrend or like a sideways market, then I think there's a higher probability that these downtrends can actually play out. But when this is in the primary term uptrend, you will see many traps like that, many shenanigans, many head fakes. That's why just because we're in a bull market, do you think everybody's making money? No. 2017 was one of the most phenomenal year in the market's history, yet most people didn't participate in it. I heard that Bill Ackman he was down 5% or something like that last year. 2017 was one of the most biggest bull market, yet most hedge fund and most experts was not able to participate in it, because just because we're in a bull market doesn't mean everybody's making money. The market is designed in a way that only few people can make all the money and everybody else just catering to them. You gotta understand the truth, right? You follow like everybody else, you do what everybody else is doing, then you're gonna be like everybody else, which is they do not survive this market. Qs, you know what I think Qs is gonna do? I don't want to spend too much time on the Qs here. I think what Qs is gonna do, I think Qs needs to do something like this and scare everybody out before going higher, right? That's what Qs is known for. That Qs is known for scaring people out. Like even just looking at this here, left shoulder head, right shoulder up, continued higher. Okay, oh, double bottom up, continue higher. Oh, left shoulder head, right shoulder, broke the neckline slightly up, continue higher. Oh, left shoulder head, right shoulder, neckline here. Oh my God, the Q's gonna crash. Nasdaq is crashing. Let's run for a cover. We're gonna see it crash worse than 2008, worse than 1927. Oh, really? We had the best year in 2017. That is crazy. And I think we need one more of that, right? This time though, I think it needs to make it a little bit more realistic. So let's maybe do something like this, come back down, do a little bit of neckline, coming down, scare the hell out of everybody, and then reverses back up. I think something like that is gonna happen. That's kind of what I'm thinking. If that happens, ladies and gentlemen, when everybody is running for cover, they're scared. They're scared, so scared that they are trembling and they're shaking. They are crying, depressed. Guess what do you think I'm going to be doing? I'll be buying this dip. If that happens, I'll be buying that right there. Count on it. But right now, let's see how we progress, right? Yeah. Let's go to Apple. What I really want to talk about Apple is this. I've been talking about this for some time here. This is the reason why I haven't been involved in Apple. That this does not mean, this doesn't mean that Apple has to crash like here and here, because I've seen this level, this pattern gets nullified, right? How is Apple going to nullify? Well, if this thing starts to kind of consolidate and then gets up, and what this oscillator needs to do, this is MACD, it needs to do something like this, getting back up here. But as long as we cultivate lower high like this, while the price is cultivating higher high, that's a cautionary signal. So I don't have any positions on Apple. I'm just watching to see. I do want to get back in, but I'm watching to see, are we going to see this bearish divergence, this weekly bearish divergence getting nullified, and then the market continuing higher? Are we going to see some meaningful correction? I am secretly hoping for that correction. I'm sorry if you're on Apple. I'm not saying that's what's going to happen, but I am secretly hoping that we're going to see some good size correction so I can start buying some level there. So that's let's see how that plays out. I'll follow up on it. I don't know, not next week, but how as it starts to progress. But Tesla, you see, let's see 200 SMA. Well, 200 SMA is now, you can see that 200 SMA is starting to curl down. So when this thing starts to curl down, it gets a little bit hectic. You see this all throughout. You see the 200 SMA curling down, gets up, comes down, it gets up, it got hectic, right? So that's the difference. When you look at Spider, IWM, and Qs, 200 SMA is not curling down. That doesn't mean it's not going to curl down in the next couple months or something like that, but you want to give benefit of doubt. But Tesla, though, as of now, with the tangible data at hand, we can see it. I'm not making this up. I'm not saying that, well, 200 SMA has curled, well, it's going to curl down. Did I say that on the S&P? Did I say to you guys that, you know what, guys, this isn't going to start to curl down? See, that is just speculation. That's just an opinion, because that's not a fact. When you do your technical analysis, you always want to do your analysis based on the fact, which is we are still rising. That's a fact. But if I say that the 200 SMA is going to curl down, that's not a fact. Tesla, though, when I say that Tesla starts to curl down, that's a fact. So things are hectic. I bet you we don't even need to see 200 SMA. You can see this price how this thing kind of came down pretty hard here. And we have that uptrend support here at the same time with this big giant top is actually a island. You got the gap up, we got a gap down. This thing is an island. That is a huge island that has been formed in, wow, let's see, 1 year. That is a big island. So if the buyers want to remedy this, buyers want to like nullify this humongous island reversal, needs first to fill that gap. Needs to fill that gap and then fizzle, consolidate, and then start to breach this box and start to kind of gap back in. That, if we start to see them, that's going to take time. Then we can nullify this. But if we can't, if this gap remains open, this thing starts to fall, then things gonna get hectic. Again, we do have this uptrend support, but that island, it seems to be very, very heavy. This is a very, very heavy look there. So let's see how that plays out. GLD, I'll let you guys go here. GLD, GLD is actually still holding pretty well. Remember this Fibonacci that I drawn last time? I mean, I think that was like a couple months ago when I did GLD analysis for the market update. But that's when I drew that, put that Fibonacci there, got up, pulled back to exactly where? 50%. And then came back down, retest, we're back up here coming down. Good news is that we're consolidating. That's a good sign right there. And in the minor term, I know we got the higher high potentially, we got the low, potentially high low, tough to say. But we need to start closing above 128-ish. It needs to start closing above it. If we start to hang around too long, not too good though. So this is a little bit of a kind of a, it could be dire situation. We don't want to see this thing holding up too long here. We want to see this thing breaking out, kind of doing a bull flag. But if this thing starts to lose it, that could be a problem there. But you know, looking at more of a longer term perspective, potentially, you know, very wide invert head and shoulder, and this is a neckline right there. So we're still below it. Once this thing gets above it, definitely there's a confirmation there. But it's just working. It's trying. But it's starting to kind of be a little bit hectic here. Let's see if we can get up here. Let's see if we can hold it and then continue on. We'll go from there. We'll have a wonderful weekend. And well, good luck trading next week.